What is going on YouTube? Welcome back to the channel. My name is Dominic, and in today's video we're going to be talking about Beachbody stock. Now, a lot has happened over the past week or so we have a lot to cover in this video. However, before I go any further, I do want to state that I'm not a financial advisor, and if you guys are new to the channel, please go ahead and subscribe down below, like the video as always, and turn on post notifications. I upload videos 5 days a week, Monday through Friday, so if that does interest you, please subscribe down below. I greatly appreciate all the supports. And now that I've gotten that out the way, let's get right into the video and just look at their share price. Currently they're trading at $3.67. After hours they're down to $3.61, and this daily chart does not look pretty for them. If you go to technical analysis here, we saw that they broke their golden cross into a death cross in around July, and they've never recovered. They went all the way from $10.16 to $3.61. That's not good at all. They had a low today of $3.35. When you lose a lot of your value that quickly, especially when you just merged from a SPAC, it's not good for investors, it's not good for owners, and something has to happen, right? They currently have a market cap of $1 billion. And when we look in the chart here, we're going to see their third quarter financial results. And I'm going to go over the good, the bad, the ugly. Mostly the bad and the ugly, because there's not too much good to like about this. So when we go to the results here, I'm going to highlight what I'm looking at as I read it. Their total revenue for the third quarter was $208 million. And at first, you think about it, that's not bad. $208 million for a quarter, a single quarter, and they're only worth $1 billion in market cap. That's not bad at all, right? That looks like a fair valuation. Here's where they get you. That's a 17% decrease compared to 2020 and a 6% increase compared to 2019. What worries me is the 17% decrease to 2020. If you guys read their investor presentation chart, they predicted a steady revenue growth heading out of 2020 into the future. They said that fitness was going to be revolutionized and all of it was going to be digital and online because people were stuck at home and they're going to want to stay that way. Their investment thesis was wrong. They have a 17% revenue decrease. What's going to happen next year? Are they going to decrease again? Are they going to find a way to stable out? The uncertainty is real in this company, and that's why we're seeing investors jump off the ship. Now, when we look at the digital revenue, it was $94 million. Sorry, that's only a 5% decrease compared to 2020. So it's not as bad, but it's still a decrease. That's not what you want to see. Investors in the stock market want to see growth, especially with how the market's acting right now. If your company's not growing and it's not doing its best to grow and to get more revenue, investors don't want anything to do with you. What I'm really worried about, however, is the last thing I highlighted. It's the very last thing right here. It says their nutrition and other revenue was $108 million, which at first you're like, okay, cool, that's not bad. That is a 29% decrease compared to 2020. So within a year, that's a 29% decrease and a 16% decrease compared to 2019. That sucks. You need to find a way to get more nutritional revenue. They're not doing any of that, guys. They own different nutrition brands, pre-protein, protein bars, everything. They're not making enough revenue than they were before, and that's a huge concern, especially when you have a net loss and you still have a negative EBITDA. So not only are you making less money, you're losing money and you have a negative EBITDA. From an investor standpoint, this is not a good outlook and this is not a good future for Beachbody stock. And that's why investors are bailing. The question is, when is this stock going to stabilize? Where is this stock going to stabilize? No one can truly give a definite answer. When we look at their 2021 financial guidance, which means what do they predict the company is going to be by the end of 2021, they predict a total revenue to be between $820 million and $830 million. Which, again, not that bad. And a revenue of $830 million and your market cap's $1 billion, that's what, a 1.2x EV to sales ratio? That's not bad at all. That's fairly cheap. However, the revenue's not going to grow. It is very unlikely that this revenue does grow. They still have a negative EBITDA, which also does not help their case. And as I said, they're down 30% in their nutritional products and I think 19% overall since 2020 in revenue. That's not good. You want your revenue to grow. Obviously, you're a business, especially when you do everything online. You don't have too many supply chain issues, and with inflation, being reported at 6-7%, and that's what the government's reporting, unless the business is growing by 6-7% at the minimum, should be higher than honestly like 14-15%. If they're not growing at 14 or 15% in revenue, especially this year with inflation worries and just big spending by the government, there's no reason to be investing in Beachbody. You can spend your money on other stocks that are more hypes, even if the fundamentals are worse, which the fundamentals of Beachbody are pretty bad. Even if the fundamentals are worse in another stock, at least the hype might drive it up. There's no hype behind Beachbody. In fact, most of it is hate at this point. Investors are fed up. They've lost their money. They are not happy with the company. And it's very, very hard to predict the future for Beachbody at this price. From a straight technical analysis standpoint, looking at the chart, unless they could find some supports at like the $3.30 or $3.50 price range, if they can't find support, I have no reason to even look into them as an investment. And that's the main concern here. If they could build some support and start getting some accumulation at the $3 range, I might look into them, say, hey, maybe their revenue is going to stabilize. Maybe eventually they could start building more and more revenue, because their digital revenue was up 1%. When you compare the rest of the revenue, they're down. But the digital revenue is up 1%. Can they continue that and become a digital subscription company and become an SaaS company, which again trade at very high multiples? Is that possible? I don't think so with Beachbody. But if they can start to become stable in price, I can look into it, do some research, and actually decide if it can happen. Right now, I have no desire in Beachbody. You should have no desire in Beachbody. If you're currently invested in them, I'm so sorry. I'm sorry that you have your money tied up in a company like this. And I would do some serious questions and say, hey, do I still want to own this company? Do I want to sell for a loss and get the tax benefits for it, or do I want to hold because I think this company is going to recover long term? Me personally, I do not believe this company is going to recover. If they are going to recover, it's going to be a long play. You're talking about getting your money back in 5 or 6 years, in my opinion. That's a long time. There's a bunch of other investments out there that I like a lot more, like Volta Charging, BurgerFi, Line Electric, even cryptos like Bitcoin, Ethereum. There's a bunch of different other places I'd put my money currently over Beachbody. But again, I'm not a financial advisor. I'm just an idiot who likes to talk about stocks on YouTube. So take my advice or anything I'm saying with a grain of salt. But that's going to be the end of today's video. I hope you did enjoy. It is currently Friday, so have a great weekend. Hope you had a great, week in the stock market and the crypto markets. Let me know down in the comment section below, what were the best stocks you chose this week? What were the worst stocks? Which ones were the best performing? And I'll speak to you guys Monday. Peace.